Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some commentary on the grains for today, Tuesday, July the 28th. Let's start out with the corn market. Obviously, we've taken the weather premium out. We had a magnificent 70-cent rally to the upside. We've now had over a 70-cent break. Both of those events have happened with almost zero rotation. It's also been revealed through the commitment of traders that perhaps we have some money that's caught, particularly in the managed money sector, unfortunately long on the rally and now dealing with the consequences. Realize that data is of last Tuesday, so when we get Friday's data, it will be as of today. We'd like to see some liquidation there to show us that that money that's effectively wrong the market has gotten out of the position and we can kind of clear the deck a little bit. My humble opinion, corn at these levels is oversold enough for me to be paying attention for some kind of a reversal and to potentially go ahead and fill that gap that we saw on Sunday's open. The stochastics have been beaten down enough that those are the things I'm watching for. Export sales, once again, I want to see over 1 million metric tons. The exports last week were okay, but the market in my mind has just been a full-blown liquidation. Realize too, we had another borderline catastrophe in the Chinese stock market, and you had broad commodity selling as people in China deal with their margin calls related to the equity market. Moving on to wheat. Wheat had a very peculiar trade today. If you noticed yesterday, it didn't really break as much on a day-to-day basis, but it was already down considerably more prior to that. I think you've seen some bottom picking in that wheat-corn spread. $1 was an area where people had, voiced interest in doing the spread. Trades $1.10, trades up to $1.35 today. So you've seen some buying of wheat and selling of corn here recently. I thought wheat closed very well. I think wheat's going to go ahead and try out the 515 area again in September. Keep your eye on the Kansas City, Chicago. That spread did trade even money a couple days ago, traded up to 8.5, 9 cents yesterday, and back down to 4.5 today. We'll be able to see shortly, once we get the rest of the harvest out of the way, if there's any more upside in that spread. As you guys know, historically, Kansas City, Chicago, closer to 20, 30 cents over as opposed to even money. So wheat, really a quiet trade. If we can get more action over the highs tonight, there was a bidder on the close today. They came for it. They were showing some size on the ladder. You got to believe that they're going to follow through in the overnight, and I would think the same for corn. Moving on to soybeans, that was really the most vicious break as far as the actual value per contract. We broke beans from 10.45 on the 14th down to almost 9.30 even yesterday. I thought the close yesterday was really poor, and then last night here they come to buy them, and they bought them almost all night. What I really liked about the action in the beans today was we were kind of actually looking a little weak going into the close, trading 38, 38.5 in November, and here come the buyers to take it back up. So perhaps if today's price action can hold, we can get a little bit of back-end filling and a higher trade going on in the grain markets, just because of how, in my opinion, things got a little bit too excited to the downside. We've still got a long time until we harvest this stuff. A lot of people would tell you that the carryout from last year has been grossly overstated for soybeans. We got a report coming. Beans have broken well over $1. Now we can see what they can do to the upside. Meal needs to be the leader. I was not a fan of soybean oil actually being the market to do some leadership today. Never like to see that. But if meal can get up off the ground a little bit, allow beans to take out today's highs, maybe we can go ahead and try to at least put another 10, 15 cents on this market, calm things down. Now that we've, I think, run our course of liquidation. Still have no idea about yield. August is a month for beans. I think if we could just at least keep 9.30 as our near-term low, we're going to be able to establish a little bit of a range. Obviously, it's large right now, but we've got a few more days in this trading week. If meal can lead us to the upside, let's see if beans can sustain this rally and not come under any kind of, pressure from global equity markets and just basically a commodity exodus. Notice that you did have crude oil and copper also bouncing today. Cattle stopped breaking, etc. It just was a little bit of a better day for commodities. So again, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Thanks for listening and have a great day.